Hi, everybody. I hope you are well. My name is Costa, and I'm the host of the 5% Perspective, a YouTube series based on Trading Journal. In this YouTube series, I would like to share with you my journey in trading, my daily routine, and the process of learning through my errors and how I evolve as a trader using my journaling and studying my mistakes and my errors. Before we go to my daily routine, before we start with my daily routine, I just want to make a disclaimer that this is not a channel for financial advice. Please do not follow my trades. Most of the trades most likely are losses, so do not take it as a financial advice. This is clearly for training purposes, for journaling. This channel is based to help traders, new traders like me, to learn to expand as a traders based on journaling and how to create a systematic journal like mine. I used to struggle for years with journaling until I created my structural journaling, and ever since I have seen a lot of results to my trading journey. So yeah, with that being said, I hope you enjoyed, and let's go. So all right, so this is my trading journal, and what I do every day, I like to follow a specific checklist. So as you see here, I have a weekly checklist and a daily checklist. Weekly checklist, there are some things that has to be done every week. Usually those two, I'm doing them at the start of the week, and the last one, make a reviewing summary of the week. It happens at the end of the week, and checking and update the Elliott waves. It can happen anytime during the week. So we won't focus with that. We're going to our daily routine, and our daily routine is look. It looks like that. Oh, sorry, it's a bit funny. Anyway, there it is. Okay, so the first thing first of my daily routine is to review my last week's summary. And this one, I have it over here. Last week's summary, which I've done it on Sunday. And this is the last week's summary. So Monday, price moving on an upwards channel, price on an uptrend during the impulsive phase. Friday was upwards unbalanced with a POC at the high. Sunday was upwards unbalanced day with a POC at the low. The day opened above Friday's range and above Sunday's value area high. The day opened above Friday's range and above Sunday's value area high. Price got dropped down to the Sunday's value area low and got a small bounce of the level, consolidation above the Sunday's value area low, retest of the Sunday's value area low and Friday's high, and bounce of the level on a pin bar and reversal candle, move above the Sunday's value area high and consolidate above the level till the end of the day. The day closed double distribution with a POC at the lows, price evolved upwards but failed to move higher of the current impulse high. Yeah. Yeah, this is the current impulse high, move high, and fail to take this high. Price action price action shows that the market is actually at the higher Sunday's region, but failed to test Sunday's high. And from weekend evolution, so that was Monday here. So price fall below the previous week value area high and moved back above, failed to test the weekly open, and then reversed and closed here just above the previous week value area high. On Tuesday, price moving on an upwards channel. Price is on an uptrend above the channel top. Price is during the impulsive phase. The previous day was double distribution with a POC at the low. The day opened above the previous day value area high. I favored longs, break down the previous day value area high and backtest the level. Move down to the previous day low, consolidation above and fake out, and consolidation above the previous day low till the end of the day. The day evolved balance, price evolved downwards. Price price action shows that the market is auctioning for lower prices. And by weekly perspective, Tuesday price moved back below the previous week value area high level and dropped to the previous week POC where price got a bounce of the level. Wednesday price on a moving in an upwards channel, price is on an uptrend forming a range above the channel top. The previous day was balanced, the day opened above the previous day value area low. I favored the longs, moved up and break out the previous day value area high, consolidation above the previous day value area high and fake out of the level. Drop down and break below the previous day low, bounce on a fake out of the liquidity low, consolidation below the previous day low till the end of the day. The day evolved downwards unbalanced, price evolved downwards, price action shows that the market wants to move lower and it's testing the liquidity low. The level hold, but price failed to re-enter back in the previous day range. Okay. So the level hold it, but it failed to move back in the previous day's range. This is the previous day low. And this is the Wednesday. So it front ran the value area high, broke below the value area low and consolidated below the level. Wednesday price was approaching the previous week value area high, coming off a bounce of the previous week POC, but failed to test the previous week value area high and dropped down below the previous week value area low, consolidated on the level till the end of the day. Okay, so Thursday price moving on an upwards channel, price is on an uptrend forming a range above the channel top. Price is during the corrective phase. The previous day was double distribution with a POC at the high. The day opened below the previous day value area low. I favor the longs of the back test of the swing low level. Consolidation above the day open, attempting to get acceptance in the previous day value area low. Move to the down and fail attempt to test the previous day low. Second attempt to get acceptance in the previous day low, move below the previous day low and bounce of the day open. Move up to the previous day value area high, previous day high and consolidation on the level till the end of the day. Okay, day open below the previous day value area low, try to find acceptance, got one, rejection, failed to test the previous day low, move back above, found acceptance, move back below and bounce at the day open, all the way up to the previous day high and value area high. So that till the end of the day closed double distribution with a POC at the upper balance. The day evolved upwards. Price action shows that the market is having another attempt to the upside, however, price failed to move and take the previous high in the market structure, like this previous high. Also, the market is failing for a couple of days, but the day was double distribution with a POC at the high, and the day-to-day moved back above the test, the POC, and value area high before. Also, the market is failing for a couple of days, but the previous day was double distribution with the POC at the high, and the day-to-day moved back above to test the NPOC and N value area high before it continued downwards. So Thursday price was consolidating on the previous week value area low and bounce of up the previous week value area high. Price Friday, price on an upwards channel, price on an uptrend during a range above the channel top. The previous day was upwards double distribution with the POC at the high. The day opened below the previous day POC. I favored the longs. Fake out, rejection of the previous day POC, bounce of and consolidation of the previous day low. The day closed downwards, double distribution, price evolved downwards, breaking down the trend higher low. Price action shows that the market is bearish. Excuse me. Friday price rejection previous week value area high down to the previous week value area low. Weekend price move to the previous week low and consolidated on the level. Yeah. And this one is more visual from the entire week. Market structure, the previous day, day evolution, and how the day evolved in terms of market structure. I just like to watch it. Sometimes I can point out things. Yeah. All right, and the trades of the week was the day trade BTC 18 at the 12th of it was the Tuesday. Tuesday price moving on upwards channel, price on up and above the channel top price during the impulsive phase. The previous day was double distribution with the POC at the low. The day opened above the previous day value area high. I favored longs. And BTC 18 on the day trades, BTC 18 was this one. Clarity, previous week value area, fake out and retest, and to respect, confluence, broke. Okay, this is my rules. So, same. So this is the context. Price moving upwards, channel above the channel top, price on an impulsive phase. The previous day was double distribution with the POC at the lower balance. The day above the previous day value area high. Daily plan, long in favor. So long the previous day and POC, value area low and previous day low. Okay, fake out and retest of a previous day value area low, approach and breakdown on decent bearish volume, fake out on low volume, consolidation on increased bullish volume, back test on decent bullish volume and bullish CVD. What are the supportive evidence? Back test on reversal pin bar with decent bullish volume, bullish CVD. And the outcome was, what was the outcome? I didn't take a photo and it was a loss. Okay. No more information about it. Price moved straight underwater. I've got to take a photo. Okay. Yeah. Moved straight underwater. Not much I can do about it. And then next one was BTC 19 next day on Wednesday. Price moving upwards channel, but I will read. Yeah, I have the context here anyway. Price moving on a downwards consolidation above the global support AVWAP channel bottom. Price on an uptrend moving on an upwards channel currently above the channel top. Price on a forming a range above the channel top. Previous day was balanced. The day opened above the previous day value area low. Daily plan, longs in favor. Fake out on liquidity low, monthly VWAP and 6.6. What are the supportive evidence for the entry? I do have evidence. My trading plan was more of a swing trade plan rather than a day trade plan, as the target was way too far for a day trade, and this is because of my greed. Yeah, so that was an even trade. I didn't hit my targets, and that was even because of my greed. I placed the targets too far above. Yeah, that's on 30 minutes. So there are other levels inside here. I should take profits, partial profits, but I target the liquidity high as of take profit one, and that was greedy. That's why price reverse. It took me out on even. And the other one, which one? 20 on the 40. So I broke the entry rule. Confluence, I had no confluence. Risk management, I respected. FOMO respected. Evidence question. Okay, I respected. Price moving in the same context. Price on an uptrend moving in an uptrend above the channel top. Price currently is attempt to break down the channel top and local change market structure level. The previous day type, a day open. The previous day was downwards double distribution with the POC at the high region. The day open below the previous day value area low. Swing deal plan, swing long the back test of the local CMS level. As price formed a local range, day trade the range accordingly. Not a good plan. That's not a good plan. Anyway, what happened here? Reaction day opened below the previous day value area low. The previous day was downwards day. What are the supportive evidence for the entry? Rejection of the previous day value area low and bearish CVD. Other notes, the entry was on FOMO of the rejection candle. I did not check the delta on the candle, which was positive, and in this case, I should wait for a retest. This candle. Oh no, this candle. Delta was positive. Yeah. If it was FOMO, this is broken. Trade management, 50% profit at the local swing low. Progress notes, price hit TP1 and reversed to hit the stop at even. So that was a win. And swing trade BTC 10 on the 14 as well. Is this one? Price is on a downtrend during the rally at the global support channel bottom, AVWAP and 618. Price is on an uptrend moving in an uptrend above the channel top. Price currently attempting to break down the channel top and local CMS level. So price is attempting to break the channel top and local CMS level. And the entry, fake out and retest, breakdown. Fake out and retest of what? Of the liquidity low, which is also the swing, the local change market structure level. So fake out and retest, breakdown on increased bearish volume, fake out on decent bullish volume, second breakdown on decent bearish volume, fake out on decent bullish volume, continuation on decent bullish volume. What are the supportive evidence? Continuation on decent bullish volume, which is this engulfing candle up here with positive delta. Trade management, 50% profit at the local swing. Target the AVWAP 382 Global 236. Price moved in my favor, approached the TP1 and reversed. I did not move the stop to even because I was afraid of price hit the stop and bounce of the previous day VWAP, previous day value area low. So outcome, it's a loss. Hit the stop loss, move all the way down. Was in my favor, yeah. I did not move the stop to even when I noticed the move away in my favor and close to the take profit one because I was afraid of price getting bounced of the previous day value area low and taking me out on even, then move in my favor. That was a bad trade. That was hope. So from one hope I broke this. That was hope. So I broke this rule. Okay, so ideas I had last week was when price action looks like corrective, I should look to set up on liquidity levels rather than other levels, as the impulse will not be that probable unless I have strong evidence of a reaction upon an other level rather than liquidity. I should spend more time to make a daily plan make the daily plans and elaborate more upon my approach of the market for trading the day ahead. If I'm not convinced of the breakout, I will wait for the retest, and if the retest is not convinced me either, I will wait for the engulfing candle. Conclusion, I must give some time to review the daily context before I make any plan, and if I feel I can't see anything, I should not force myself to make a plan. Very common sense. I must be more aggressive with entries when there are engulfing candles upon the reaction, like on the fake out, on a break market structure, or after the back test. I must become fearless of losses, and the way to do so is to execute more frequent upon any reaction that meets my criteria, but not hold any bias, so if price goes against me, I can be able to change bias and cut my losses short. Delta against the position, but on low volume may show weak attempt and can be actually supportive evidence of the position. And mistake, during the two upwards attempt this week, price failed to take the previous high, and this was a sign of weakness I failed to notice. On the swing trade 10 long, I did not move the stop on even when I noticed the move in my favor and the approach of the take profit one. I was afraid of price taking me out on even and then move to my target, so I decided to keep the stop excuse me. I decided to keep the stop on loss, and I hoped the price will get the bounce of the previous day value area low. But instead, price hit the stop loss at the loss, hit the stop loss at loss, hit the stop at loss. Also, I failed to notice the fake out and retest of the previous day POC because of my bias being already in a long position. I kept forgetting to include volume in the local trend context photo, yeah, and I still keep forgetting to do that. I remember that. Cool. So, first thing done, review last week's summary. First thing in the context, so let's journal the previous day levels. So previous day type, here we go. So the day open, no, I can't do it like that. All right. Excuse me. So the day open above the previous day POC. Um, Rejection on fake out of the previous day Valeria high. This fake out is not a clear fake out, it's shallow. Didn't even just touch the level and just got rejected. That small fake out here. But anyway, I classify it as a fake out. So rejection on a fake out. Previous day Valeria high. Approach to the previous day Valeria low and reversal sell back to the previous day Valeria high before testing the level back to the previous day Valeria high. Rejection the previous day Valeria high down the previous day Valeria low, bounce on a fake out, and retest of the previous day Valeria low. Rejection previous day Valeria high. Fake out and retest up to the day open, consolidation on the day open till the end of the day, on below, consolidation below day open till the end of the day, and the day closed balanced. And the reaction. Yep. So one reaction was this. fake out, first fake out, break out, and rejection on increased bullish volume. Second, rejection on a reversal in bar, low bullish volume. Paris CBD being formed. And the second, test and rejection of the level on bullish volume, breakout on low bullish volume, fake out on not low, decent bearish volume, breakout, fake out on increased bullish volume, and backtest on backtest with rejection on increased bullish volume. Okay. And the last one, last reaction was this one, the previous day Valeria low. So breakdown, fake, and retest. Yeah, that's a BMS on increased bullish volume, but you wouldn't wait for that one to go anywhere on a balance day. You don't have much space, so you need to get from down here somewhere if you want to win this. But anyway, that's what the reaction was. Excuse me. All right, I'm moving forward. Document the journal the previous day levels. Then document the previous day evolution and collect setup statistics. So from here, we're going to the local market structure and see how price been evolved. Yeah, daily plan. No. Price evolved sideways. That is done. Had no setup to collect any statistics, so moving forward, document, mark out new previous day levels, context, and make the daily trading plan. So new entry here, context and daily plans. Marking out the new levels for the day ahead. No new negative point of controls. All right, let's mark out the context. Price on a downtrend. No, that's not right. Because now it's on a downtrend. Its uptrend is relevant price change market structure. So I should go to but I haven't back tested, so I'll keep it like that. All right, I'll keep it like that until back test, and if it continues making lower highs, then I change how it looks like. But right now, it's just one impulsive phase to the downside. So price, just price BMS to the downside, the down, price broke, in the channel, and BMS came back downwards, same time. Price haven't back tested the BMS level yet. Price is downwards. So previous day was balance and price open above the previous day POC. So previous week levels, price is consolidating on the previous week low. And in terms of the previous month level, price is the previous month open. Consolidating above the previous month open. Okay, so let's see what we made. So we can make an informed decision plan. So let's read the whole context from the beginning. So the global market structure is on a downtrend, consolidating above the channel, the global channel top during an upwards consolidation rally. Local market structure, which is the upwards consolidation rally. Price broke to the downside to the channel top, and same time break market structure to the downside and haven't backtested the level, and is currently on the impulsive phase. Haven't made big moves, big swing highs and lows, so it's just one impulsive move to the downside. The previous day was balance and the day open at the POC. Previous week is at the low, consolidation at the low, and monthly is consolidation at the monthly open. So because the previous day was balance and the day open at the POC, I will favor balanced days, a balanced day. Yeah, I will favor a balanced day, but shorts are in favor because price on a downtrend. I favor no. Trend. I will get the balance day. Okay, so shorts are in favor, which means shorts can be aggressive, longs need a bit more evidence, have to be conservative to execute longs, but shorts can be aggressive. And I will favor the break to the downside, which means every short I will allow some partial position to run. And yeah, that's the markout levels. Okay, check the weight, trigger, and open positions. So that's in the for the swing trades, which is waiting for triggers. I have the BNB long, and the setup is this one, 786, 618, and channel bottom, BNB. I want to take this PMS level to enter, or give me another more deep fake out, breakout and back test, breakdown, fake out and back test with a deeper fake out. Or if you take the BMS level, if nothing of this happened, I'm not executing, and the CAU, yeah, that's far below the. I'm waiting for this anchor VWAP with the daily level and the 382, but price is far below. Yeah. So I'm waiting to break above, backtest the level, and then I will execute. And Solana, which is the 618 and the bottom, same as as BNB. Just broke down again, so now I'm waiting for the fake out, I guess. Now I'm waiting for the fake out, and let's see what's gonna happen. All right, don't have any other levels. Mark out the previous month, if it's a new month, it's not a new month. And the last thing that I have to do before I start trading is to read out loud the edge and the rules, my edge and the rules, to remind myself how I should approach the market. And let's go for it. My age is here. For swing trades in the global market structure direction, allowed on aggressive entries and are allowed to run with no partial profits and trailing stop loss. Swing trades against the global direction must be on the local market structure direction and must have quick partial profits and clean target at the global SR level with confluence. And day trades, for day trades, aggressive entries in the favor of the local market structure direction and conservative entries for trades against the local market structure setup must be inside the previous day range, but if there are any setups close to the previous day range, they are still valid, but any setup far out of the previous day range is a swing setup. Take entries on confluence levels, naked volume levels, and liquidity levels are acceptable with no confluence. Uh, Day trade setup and target must be in the previous day range. Entry criteria: pin bar if they convince me, otherwise wait for the engulfing reversal candle. Fake out if it convinced me, otherwise wait for the retest, and if the retest is not convinced me, then wait for the engulfing candle. And my rules: for entries, aggressive when in context favor, conservative when against the context confluences. High time frame setups must have at least 3 levels of confluences to be valid. Intraday setups can have 2 levels of confluences if the setup is in favor. Naked previous month, week, and day volume level, VWAPs, or liquidity levels are exceptions. Risk management: trades in favor executed on market order upon 1% risk only. Trades in favor executed on limit order up on 0.5 risk percent only. Trades against the trend only on the market order on 0.5 risk. Limit orders must have the stop loss 2 highs above, 2 lows below the previous market structure. Allowed only if the context favor one side and only in context favor. Do not enter the trade based on hope. Do not keep the trade open if the hope there is no support evidence. Do not enter premature because of FOMO. Answer the evidence question of the trade entry before execution. And that's been done. So that was my daily routine. And that's how I follow my daily routine every day. That's how I'm making plans. And yeah, looking to trade the day ahead now. So I'm looking to trade a balance day in here. Previous day low. No, it just got a bounce of the previous day low. But yeah, I gotta have the opportunity to enter. And yeah, let's see what's gonna happen. I need to set up new alerts all over the place for all right, so yeah, here we go. This was my trading routine, and I'm ready to trade the day ahead, looking for a balanced day. So I hope you enjoyed, and see you again on the next video. Have a beautiful day.